I'm Stacy Childress. I'm the CEO of the New Schools Venture Fund. This is my colleague, Tanika Cheek-Clayton. She's the managing partner who leads our ed tech investment work. And we thought we would take you through some really interesting sneak peeks at a very big data set of market research that we've been working on with Gallup and with EdSurge. So we'll tell you a little more about that. First, I wanted to tell you just a little bit about New Schools. If you want to know more about the two of us and our backgrounds in the app, our bios are there, so we're not going to say anything else about ourselves. At New Schools, we believe that every single young person in the US, which is where our investment activity is, that every single young person in the US should finish high school prepared and inspired to build a good life for themselves. We think that life should be full of opportunity, choices, connection, and meaning. And for this to be the case, kids need to build a really strong academic foundation, but they also need to build other mindsets, habits, and skills that are important for success in young adulthood. So all of our investment activity is organized around that vision. The challenge is most of the schools we have today weren't really designed with that vision in mind. They were really put together for the society and the economy of the early to mid 20th century. They worked pretty well. They reflected what we believed about opportunity and who deserved it, what we believed about each other, and basically prepared most of us for the kinds of jobs that were available in our towns or our regions back then, and that were considered appropriate for us, given who we were. The problem is the world has changed an awful lot since then. What we think about each other, what we think about opportunity, and who deserves it continues to expand, and we think we need the kinds of schools and an education system around them that really reflects that vision, that optimism for young people. We invest against that idea in 3 portfolios. One is an innovative schools portfolio where we're supporting the creation of brand new schools. About 100 of those over the last about 4 years of investing. Some are still in the planning stage. Some have launched. They're both district schools and charter schools in that portfolio, brand new innovative schools. We also have a portfolio that's focused on helping existing schools, where most of our kids show up for school at the beginning of a year, a school that was open the year before. We're investing to help existing schools really rethink, reimagine how they deliver education in order to help kids meet that vision. We do that by investing what we call model providers that are organizations that help schools think about redesign and how they might go about putting those visions into practice through curricular, PD, and administrative resources. We do have an ed tech portfolio. We're going to talk more about that today. We're focused on increasing the availability and quality of ed tech products that enrich student learning. And then we have a portfolio focused on diverse leaders. We think if we're going to create the kinds of schools and tools that this most diverse generation in history need to be successful against that vision I laid out, we need the best ideas from everybody. And at least in education reform, and I think it's also true in technology writ large and in ed tech, oftentimes our founding teams aren't as diverse as we would like to see. And so we have a very specific goal to help increase the number of founders, leaders, board members, and other leaders in education organizations to 40% Black and Latino over the next several years. And we want to reflect the student demographics in our public schools today, which that would do. We also focus on diversity in our innovative schools portfolio and in our ed tech portfolio. In Tanika's portfolio, just under 20%, I think it's sitting around 18% of the founders in that portfolio are Black or Latino. In our innovative schools portfolio, we've just reached the 40% mark there in this round of investing. We do a bunch of things in common across all those portfolios. We build pipelines, we try to make the best investment decisions we can, and then we also support, once we've invested in an organization and in groups of organizations, we provide them with management assistance, help them build great boards, raise more money, think deeply about their operating model. We create communities of practice among them. Some of you see some familiar faces that are part of those communities of practice. We're so glad you're here. Helping them learn from each other. We bring other experts to bear in ways that would be difficult for one organization to do on their own, and we can spread that across. And we try to share our learning through what we call thought leadership, or as our communications person who's right down front likes to say, we need to be leading with some thoughts. So this today is an exercise in leading with some thoughts. We're learning some things, and we want to share those with you. For our EdTech investment strategy, we really have 4 priorities there. We want to address market gaps. So where we don't see as much investment or innovation in an area of the EdTech market that teachers and sometimes kids say are super important, but they can't find enough things or not enough great things, we want to try to mobilize folks to create solutions there and put our money to work in that way against gaps. We help those that we select grow and scale their ventures through the management assistance I talked about a minute ago, both helping them build great companies, great products, but also helping them with fundraising. We help them improve their products by investing in efficacy, usability, feasibility, and efficacy studies for them. We foot the bill for those for ventures that are part of our accelerator program, and spend about $40,000 per investment per venture just on studies. And then we prioritize diversity, equity, inclusion, as I told you about a minute ago. So we track both the diversity of the portfolio we're investing in, and we also ask the entrepreneurs we invest in to think about those issues inside their own organization and in the products that they're creating. Here's a quick snapshot of how we're doing. The strategy I'm telling you about is a new one that we launched back in 2015. We are 20 years old or 21 years old this year, but we launched a brand new strategy that covers this ground that I'm describing here in 2015. So these are our data from 2015 to 2018 in our EdTech portfolio. We've invested in 74 solutions. Again, a few of you are here in the room. 61% of the ventures in that 74 actually serve low-income kids at higher rates than they are in our public schools, and so we're super proud of that. It's a big focus area for us. You see in the orange there the market gap topics that we focused on between 2015 and 2018, and within those we've invested in between 10 or 11 and 15 ventures, so that's how you ladder up to 74 across those 6 areas. We have a big focus, as I said earlier, on performance, on efficacy, on student outcomes, and so we look for that in the diligence process, and as we're providing management assistance, in addition to the efficacy studies that we're supporting, we also really encourage our ventures to think about a longer-term research and evaluation plan. We're proud that in that portfolio that we have as of today, 39% of the early-stage companies already have some evidence of learning outcomes. That might sound a little low, but for an early-stage company, it's actually pretty good. Mostly you do usability and feasibility in the earliest years, so to have nearly 40% of them with some evidence of learning outcomes we think is terrific. 42% of companies at mid-stage, and then 80% of later-stage companies in our portfolio have some evidence of learning outcomes. Tanika's going to talk a little later about what it looks like broken out in the portfolio, given some of the data we saw in the market research we're doing. And like I said, we help companies fundraise, and we encourage them to think hard about their fundraising pitches. We're super excited. We've been able to catalyze 17 times the capital we've put into this group of companies. They've collectively raised $117 million since we invested in them in this 2015 to 18 period. So here's what we're really here to talk about. After 4+ years of investment activity, we looked around at each other last year and said, feel good about the areas we're focusing on and the way we've been going about market research kind of one segment at a time. We'd really love to have a broader view of what's going on in the market, and importantly, what's been going on in the market since some other kind of large-scale market research surveys were published. And so some of you might be familiar with the Teachers Know Best market research studies that the Gates Foundation supported back in 2013 and then again in 2015. There's really been a bit of a gap since then in the update of that, and so we decided to take that on and also at the same time to support our partners over at EdSurge to update their state of the EdTech market work that they did back in 2016. So we've been working with EdSurge to review EdTech funding since 2015. They looked at 500 EdTech deals, surveyed 70 EdTech investors with a survey, and then did some deep focused interviews with others. We're gonna have a lot more to share about this study this summer, but we do have a few of the early headlines kind of woven in today. And super excited about this partnership we created with Gallup Education. They've been fantastic, and they have completed a national survey of PK-12 public school teachers, administrators, students, and district administrators and school leaders. So you see the numbers there. We're just going to give you some little peeks at some of the teacher data today. We're still in the very early stages of understanding that data about teachers, and not at all involved yet in understanding the student, school leader, or district administrator data, but over the next several weeks we'll be digging down into that. So what we tried to do for this audience and for this event was say we're going to push ourselves maybe a little faster than we would normally be comfortable with, because it really is, it's a sneak peek for you. It was like a sneak peek to us as of like 7 days ago, 10 days ago. So it's like really, really early. So I do want to set it up that way and say we're just super excited to share what we think we're seeing there. We've got four insights that we're going to share, and hopefully you're going to have a little time at the end to have some back and forth with you. But I'm going to hand it off to Tanika, who will get going on some of the insights.
All right, so the
spots?
500 deals that they analyzed, it pretty much confirms what we're already seeing out there. And I know if you've been up on just what's going on in EdTech investing, you've noticed that the overall trend has been flat. If you look at 2015 to 2018, the total amount invested is about the same, but what you're seeing is there have been fewer deals and bigger deals. And so what's been happening is the early stage companies have really been getting squeezed in this climate. And when you look at actually K-12 ed tech, it's even more pronounced in the total number of deals going from 104 to 62. Total dollars still about the same, but the average deal size going from 5.3 million to 8.7 million. So for all my early stage entrepreneurs out there, we know that the struggle is real and we're really trying to support you all. So this is kind of the backdrop for why we're doing this, because we want to understand like what are teachers saying that they need, what are administrators saying they need, but also what are investors saying about where they think they're headed, where they see the trends are. So we thought it'd be interesting to kind of pull all of this data together at one time and just give you all an update. So moving on to just here's an overview of the early insights. So one, digital learning tools have now reached the late majority. When it comes to choosing digital tools, teachers think teachers know best. Most investors say they are impact investors. Teachers in high poverty schools use digital tools more often and want more. So before I jump into I know folks were like trying to take pictures of that one slide, but I think
slide. They want to take pictures of it.
I'll just go back. Slide. Before I jump into the first insight, I thought for grins we should just go back and look at some of the headlines about ed tech. Many years ago, and the skepticism about it, questions about value, don't believe the hype, the ruin of education, and even, that's yesterday's, this is today's headlines, replacing teachers with software packages, tech in classrooms harms education. Like, there's still a lot of skepticism about it, but when you ask 3,000 teachers, are they about ed tech? And teachers are saying that they use it to teach daily. 65% of the teachers, of the 3,000 teachers, said they use it to teach daily. 53% said their students use it to learn daily. And then 85% of them say they support increased use. So when you throw up the Rogers curve of innovation and you look at those numbers, it's clear that digital learning tools have reached the late majority in terms of use in classrooms.
And we'll get a sense from students what they say about this
yes,
as well.
So I'm so excited once we get the student data as well as the principal data and the district administrators. So we'll be able to look at all of those pieces across. So, and then when you dig a little bit deeper, so we asked along specific use cases of digital learning tools in the classroom. We asked teachers, do they consider digital tools as effective, less effective, or more effective than non-digital tools? And so we talked about, should we cut something from this slide so it's easier for you to see? But the remarkable thing about this, the green is teachers saying it's more effective than non-digital tools, and the orange is teachers saying that it's less effective than digital tools. And on one side, so on the side where it's 95% or it's either as effective or more effective, that's connecting learning to students' future jobs and careers on one end of the spectrum. And then on the other end of the spectrum is managing the classroom, where you see 25% say they're not as effective. But just when you look at that across the board, like digital tools are just as or more effective than non-digital tools when you're asking about specific things. So I thought that was very interesting. Another piece, so we asked teachers to rank. We said they could only pick the top 3 factors that they think are most important for selecting digital learning tools for use in their classroom. And they had 15 options, and Gallup's so good about, they switched the order, so it's not like one thing is first all the time. But things like cost-effective, easy to use are on there. And the top 3 things that popped up were allows for personalized instruction based on student skill levels, provides immediate and actionable data and, on students' progress, and engages students with students in learning. And when you look back at data, and I have it here just so I can just be precise, but I think it's the Teachers Know Best survey from, let me make sure I get it right, from the 2015, asked a very similar question. The top 3 things were cost effectiveness, saves me time and is simple to integrate into instruction, and then the third one was about personalizing learning for each. And so you see like a shift in how people are thinking about what's most important, and that could be because maybe schools have more budgets now, there's more free items there, there's lots of reasons that could be for that, but it's just interesting to see the shift in what teachers are prioritizing.
And I think there's an important little side note, Tanika, that since you referred to Teachers Know Best, we tried in as much as it was possible to keep some of the question structures and options similar to those former studies so that we could see whether or not there were some of these shifts. So it's super interesting in this one to see that kind of a move.
All right, so moving on to Insight 2, which is always something very interesting, especially when you're working with entrepreneurs, to try to figure out who do they trust most to make decisions? And so we asked the question, what sources do teachers trust most to help them decide which digital tools to use? So kind of at the bottom rung, we have internet searches, efficacy reports, case studies, and case studies is not even, that was like one of the last things. There's some other stuff in there, but we just put it there because we know it comes up a lot, and we're talking to a lot of companies that are like, oh, we need to do case studies. Just so you know, teachers said about 6%. Now, we don't know what district administrators and other people are gonna say, but this is, just thought it was very interesting.
And the full question is case studies of how the product is used with students like yours.
That's right.
That's the actual question. This was really surprising to us because we hear it a lot. Well, efficacy studies, yes, but they're complicated and expensive, and what teachers really want is, so this was, at least from teachers, very surprising to us.
So then there's next the edu websites, district staff. So if there's a trusted site that you go to, it's still represented 39%, district staff 34%. The overwhelming response is other teachers at 81%. And so, entrepreneurs out there, your word of mouth strategy, what are you thinking about with your teacher word of mouth strategy? Because that's incredible. And to compare that with the same thing, a similar question asked for the Teachers Know Best survey done in 2013, the top choice at 59% was recommendations from administrators. The second thing was searching online, and then teachers relied on recommendations from other teachers. It was 47%, so it was down to 3. So again, a shift in how people are thinking about who knows what's going to help, which digital tools I should use. But, so an interesting counter to this is when we asked, as part of the survey for EdSurge, we asked if they always involve a current classroom educator in assessing potential investors, only 25% of the ed tech funders that responded do. It's something that we take very seriously when we're doing our diligence process. We have teachers that are part of our external review process that give us information. We also, we get input from current users on it, which I'm sure a lot of people do before they do, but it's another interesting point about the investor community. All right, so insight 3, most investors say they are impact investors. So this was encouraging to me because this is something we care a lot about in terms of like, does the product have some evidence and hope at some point strong evidence that it has positive impact on student outcomes. And so 60% of the EdTech funders surveyed considered demonstrating impact on learning outcomes as a key criterion for potential investments. Philanthropies talk about being core to their mission and vision, and then VCs would talk about, it gives us advantages in contract renewals and also driven by ESSA standards. And so this is one thing that I thought was very encouraging. And when Stacey, did you have any point on that? Okay. And in terms of just how we think about product efficacy and getting to this level of strong evidence, we know that it's a journey for any company. The early stage companies in particular, we want to help people get on that journey and help them go through the proper steps to get there. And when we look at our portfolio and we break it down by early stage, mid stage, and later stage companies, these are the percentages that have no evidence, some evidence, and strong evidence. The connection between the investment and later stage companies is really interesting because when you look at the later stage companies in our portfolio and you look at the investment dollars, the bunch that's in that 27% have raised $29 million in follow-on funding. The bunch that's in the 53% of some evidence have raised $9 million, and the bunch that's in the later stage companies in the no evidence have raised $7 million. So it actually does follow through that when you look at the data from our portfolio where most of the money has been going, it's in the percentage of companies that has strong evidence. So
and
that is encouraging.
Say the one thing I would add, a little commentary, strong evidence to our team, which they thought a lot about and wrestled through for a couple of years, is a third-party study, and it's got to be at least quasi-experimental design or an RCT. So strong evidence, they've set a very high bar for that. It's encouraging actually to see the follow-on dollars following stronger evidence. It's good to see.
Yeah. And since we don't have a whole lot of time, I'm not going to go into so much detail about all of what she just said about the how we think about what strong evidence, some evidence, and obviously no evidence is no evidence. But we actually put together a research guide, an EdTech entrepreneurial research guide, because after working with so many entrepreneurs and really realizing how difficult the process is from getting to a logic model where you understand like what specific activities are going to have the type of impact that you want to have, where you should start testing along the way, how to come up with the research questions and the right research questions that are going to get you farther along on that journey. We put together this guide to really try to bring a level of transparency around the types of studies, how much they cost, what it entails, and we're going to keep trying to build on that in the future because our goal is really to help the field really understand like how to do this in a more efficient way.
If you just Google the name of the report, it'll pop right up to the top.
Yeah. All right, so that brings us to Insight 4, which was something that just popped for us that, again, when you do these types of surveys, you don't know what you're going to get back. But teachers in mid-high and high poverty schools use digital tools more often and want even more. And how we defined high poverty schools, these are teachers who work in schools that have 75% or higher in free and reduced lunch populations. And then mid-high poverty is 50%, between 50% and 75%. Mid-low is 25% to 50%, and then low poverty is lower than 25%. So the interesting thing, when you look at the numbers, and if you start at the bottom where students use digital tools in their classrooms every day, you can see there's a spike under the high poverty, the teachers from high poverty schools at 58%, and it goes down to 50% for low poverty. And then when you look at the bar graphs here, it's, I wish I could use more digital learning tools in class to teach, and I wish my students could use more digital learning tools in class to learn. And they spike out higher than all of them on the high poverty and mid-high poverty schools. So it's just something interesting. Obviously, at New Schools, we care a lot about whether or not digital tools are reaching students in underserved populations. And so this is just, one of those things that we're just going to keep following up on.
Yeah, the other thing I realized, the blue, I think it's probably on yours too, on our monitor, yeah, it's up there. The blue bar, which the legend got cut off on the screen. The blue bar is, I wish my students could use digital tools to learn more at home. So the blue bar is about at home access and use.
Yeah.
This was surprising to us.
Yeah.
Yeah.
And so, and the kind of like thing that's disappointing at the same time is that we're seeing early stage investors are moving away from companies that are focused on selling to schools and districts. And a lot, so when you look at the data, 47% decline in the number of angel and seed investments in institutional business models between 2015 and 2018. And then we're seeing a 25% increase in the number of angel and seed investments in consumer business models. And for us, if the consumer model is such that it can allow for free access, it's great. But in a lot of cases, it's not the reality. And so it's one of those things that is troubling, but we're going to do what we can to try to mobilize folks like you all to reconsider and put the information out there about what the demand and the need is. So. All right, so looking ahead, as you all can imagine, we are just so excited to see the data come in. I mean, one, to dig in deeper to the teacher data, because this is just the top line that we got like 7 days ago. We've got a lot more stuff coming there. We've got more stuff coming on the student side, on the principal side, and on the district administrator side. So definitely look forward to the reports. We're gonna open it up. We have some time to open it up for questions. Unless, Stacy, is there anything you want to say?
Yeah, no, we're excited to see more of the data. We're going to get cuts both on the investor and on the on the investor side and from all the school stakeholders, also by segment. And so we can know some things about math products and science products and social studies products, et cetera. So we're just excited to get to that next level of data and see what's there. And this sometime, probably late summer, we'll release something pretty significant that has all this information, hopefully well packaged for you in it.
Great.
All right, questions?
All right. Richard?
Yes, I have 2 questions. One is about the measurement of efficacy and how do we conduct that. And a lot of time we believe that is so important about the impact and also the student outcome. But it's actually very, very expensive to run those RCTs, to do even just to getting through that whole process and getting third party to certify it and having even a consistent methodology to measure that.
Yeah.
That is make it compatible to academic standard. So one of the things that we are actually helping is that we have an IEEE Adaptive Instructional System working group. It's actually 2247. And actually I do a little bit of advertising for our meeting tomorrow.
I noticed that you had like slipped into advertising.
Yeah.
Yeah.
So the 2247 is about building adaptive instructional systems in a standardized way. And actually there's 3 substandards under it. The first one is about what is adaptive instructional system and what is AI in that, right? A lot of people claim they're adaptive, they're personalized, but they're not. And the second one is about interoperability. How do we build a component that's interchangeable, making those available to educators, to education companies to do that. And the third one is about measurement. And that is actually, we found is very key, is that when we say you have an adaptive system that does this and does that and so forth, how do you say yours is better than the other, right? What are the objective method to measure that. So we want to define how do we run RCTs, how do we define student outcome, how do we define learning gains, how do we define efficacy, how do we put in efficiency versus engagement in those equations and so forth. So that's, again,
So I'm gonna intuit a question out of that, which I think is, because the thing you're trying to answer, what are the best ways at different stages and for different types of products or interventions to measure effectiveness in ways that really kind of stand up to a high standard. And I would say just push everybody to that research guide for our entrepreneurs, because it's our best guess right now. There's a nice table on page 11 of the research guide where we try to lay out what we think we know so far and match them up to what ESSA in the US requires or how they define standards of evidence, and try to match certain study types that ed tech entrepreneurs can do that will fit into those different kinds of categories. Another question?
Well, can I have another?
No, maybe if we run out, okay? Because we're running out of time, but if we run out, we'll come back around, okay?
Michelle?
Thank you for sharing this hot off the press research. We look forward to hearing more of it. I have a two-part question. You got an interesting reaction from the crowd when you shared that 60% of investors see themselves as impact investors. I want to ask a two-part question. Are you able to benchmark that 60% number to any historical similar data? I'm trying to understand trends there. And number two, how do you think investors were defining impact?
Yeah, so to the first question, I'm not sure, so we can
we'll
go
have
back.
to look.
Oh, she
Sorry.
asked, is there a benchmark that we can go back to with regards to the 60%? And those
So she asked, of the 60% who said they were impact investors, is there data from the past that we can
That
say
we
that's
can
either
say.
growing or staying the same or shrinking? And no.
Yeah,
There
not-
may be, we haven't dug
don't
in
know.
to see if there's anything from the EdSurge data set from last
Right.
time around on that.
And this, so the impact investors, those were our words that we're saying is the insight. Like we specifically, and I can go back and say, we specifically asked them,
Yeah. The
is
question,
demonstrating impact on learning outcomes a key criteria for potential investment?
yeah, that's the
Okay.
question they answered.
Yes. So we're interpreting that as saying, yes, demonstrating impact on learning outcomes versus just return on,
Return on,
our financial investment. And so the second part of your question was,
Yeah, you answered there's no benchmarking data.
okay. Just wanted to make sure I got it.
Yeah, we're going to look. There was an interesting reaction in the room when we said that. Did you not believe it? What's that? Different meaning of the term impact investor. Yeah, I would agree. Yeah.
Got it.
The slides are like 30 hours old, and this one's been called many things. And so it's probably a good push for us to make sure that definitionally we mean what we say and not just say it to be cute. It at one point said everyone says they're an impact investor. I just changed that this morning because 60% is not everyone. But it's still a lot.
Hi, have you seen any trends towards wellness ed tech, any investments, and then what you see working, even if it's anecdotal and you haven't seen research?
Yeah. So the question's about wellness ed tech. What have we been seeing both in terms of investment flows and effectiveness?
Yes. So we haven't. I don't have that data, and we'll have to go back and look back at what the information that we have, because I think that's clunked up into others, so we would have to pull that stuff out to get a better sense of the wellness data. We did, for the Gallup surveys, we did ask for teachers if they're teaching health and wellness. So we'll have information on digital tools as it relates to health and wellness. it's still a small segment because a lot of teachers teach health and wellness. Like it may be like at the beginning of school or the end of school. It was hard for, like we knew we wanted to include it, but we were trying to figure out what's the best way to do it to get good information. So we tried a few different things. And so we're gonna try to parse out some information about health and wellness as it relates to digital tools. So more to come on that.
Thank you very much for the presentation. My company is Intervene. We work in K-12 analytics, online tutoring, and assessments. And looking at the percentage of investors that are moving away from institutional companies that are servicing the districts is a little alarming for an early stage company like ours.
Yeah.
What would you suggest for the folks that are getting the investment, the angel and C-level investment? What would you suggest to the founders that are in that space
Yep.
that are servicing the institution and are looking at that early stage efficacy testing? We're doing things in that space. What would you suggest for us?
Yes. So I mean, there are lots of you still out there doing this work, and it is important work, and we want to try to help build a robust ecosystem so that entrepreneurs like you can continue to grow. I would say right now you want to focus on building a sustainable business model. So you want to be thinking about your growth in terms of like, how can I bring in revenue now? Like, what is the product that I need to get to start bringing in revenue now? Because it's going to take a lot more for you to get to if you wanted to do a Series A, the expectations are a lot higher for annual recurring revenue. But it's not to say that people aren't doing it. And so we're actually trying to, right now, we have a few companies that we've invested in that built sustainable models before they ever even got funding. And so we're trying to like take them and showcase like, how did you do it? Like Flowcabulary is one of the companies that I know they just got acquired. For 5 years, they took no money. They had friends and family, and then we were their first investor before after we invested, then they got, I think Rethink came on, and then they were able to grow and scale, and now they're acquired. So there are companies out there that are able to do it and build at, you have to start out, it's just a smaller scale for growth initially, but it's possible.
Yeah. I think we should probably wrap up. I know we started late because of all of the music. And so while this says we still have about 3 minutes, I know we got started late and there's another session that's waiting to get going. So thank you all for coming and thanks for your great questions. Look for the study this summer.